Hello everybody and welcome to another amazing video of DIY investing. As the market is consolidating and building support for the next leg up, I wanted to go through and actually talk a little bit about the 4-year cycles and the long-term projection of the altcoin total market cap so that we know exactly how to factor in what is going to be happening over the next 1 to 3 years, as well as what's going to end up happening going into even the next bear market and next 4-year cycle to follow. I wanted to talk a lot about how we're analyzing this current setup inside of Bitcoin, what the altcoins are doing inside of their big picture cycle, and we're going to break all of this down through a time frame perspective. So make sure you stay all the way to the end, because I know that this is a video that's going to really help a lot of you guys out, and it's going to help you guys make a lot of profit inside of the market long term. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, here we are to start off today's video. I wanted to go through and teach a lot of you guys about the 4-year cycles, talking about how it's factoring into our current cycle and what has transpired ever since our major cycle low. Now this is a good opportunity to do all of this, considering the fact Bitcoin just had another breakout to the upside. And as Bitcoin is broken out of this 200-day range, this is now setting us in for a much bigger move to the upside. So as this is happening, let's see how the 4-year cycles are factoring into this. Let's map everything out for people that maybe haven't understood what a 4-year cycle is. And if you're just new, just starting to follow along with these Bitcoin cycles as a whole. So I think the best way to do this is to kind of just simply go off of this major low that we had in the cycles. Because if you guys don't understand with 4-year cycles, the way that you measure a 4-year cycle is from peak low to peak low, right? So peak low of every cycle is the beginning of the uptrend, right? Because at the very bottom of the uptrend is also at the exact same time the beginning of the new bull run takes place, right? So when we're looking at an entire cycle, we're always measuring peak low to peak low, peak low to peak low. And we can see that happening through every single one of our bear markets. We have one of these peak lows at every single cycle. Now, another thing that we can watch for, but we'll get into this at a little bit later point, let's just simply talk about the time frames real quick. So if we draw a data point from that low, from that low, from that low, to this low, you guys are going to start to be able to see a little bit of a pattern. So every single one of our bear market bottoms has taken place exactly at the end of the year. This one was November 2011. This was January 2015. This one was December 2018. This one was November 2022. So every single bear market bottom for Bitcoin, we see it take place at the end of the year. Now, we're also going to find another interesting pattern, and that's the distance between each major bottom from this cycle low to this cycle low ends up equaling pretty close to 4 years. This happens to be the shortest cycle right here and right here. It's not a true 4-year bottom, because what we want to see in a 4-year cycle is from this peak low to this peak low to equal exactly 4 years. And 4 years equals 1,450 days. So 1,155 days, that's about 3.2 years. So it's getting close, but it's not quite an entire 4-year cycle. And I think the main reason has to do with the fact that at the bottom of this cycle, Bitcoin was worth, a micro cap, basically. It had sub $50 million in total market cap, so it wasn't really a truly adopted crypto. It was once we started getting over here from 2015 to 2018 that we see the true 4-year cycle playing out, where if we're analyzing from this peak low to this peak low, we end up seeing 1,428 days. So that's almost exactly 4 years on the dot, from end of the year to end of the year. Now, another thing that we can look at when we're looking at these cycles is really how to tell when we go into a new cycle. Once we've broken out of all descending resistance of the prior bear market, right here we broke out, consolidated sideways, and then we went in for the new cycle. Every single time we've done this, it's always occurred right around the 4-year cycle low. And once we break out and actually retest that in any sort of fashion, that's what sets in the new bull stage. And so when we're looking at all of our cycles, we can see that this is a pattern that is played out in every single one of them as well. And so when we're coming all the way over to here to start talking about this current cycle that we're in, I think it's important that we factor in all of these same, sort of arguments. So when we're looking at the date, the peak low that we had in 2018 to the November low that we had at the FTX collapse was exactly the same time from our 2015 cycle low to the 2018 bear market bottom as well. So 1,428 days. Remember, 4 years is 1,450 days. So we're seeing the exact same setup all the way through. Now, the thing that I find really interesting here is the fact on the log scale, when we're looking at the same time where we actually ended up flipping 25K as new support. Remember when we broke out right here, retested 25K twice, and that got to where we're at. It was at the move that we finally broke out of 25K being this short-term resistance. It was the same time that we broke out of our descending resistance as well, being that candle right here. So when we're looking at this, everything that we've seen in all of our prior cycles, being the 4-year cycle low, 4 years from each peak low, especially over the last few years. Because if we're looking at the bear market bottom being the FTX collapse, you know, we ended up bottoming and having that capitulation at the exact same time frames that we've had all of our other bear market capitulations. So it's really interesting that we're still continuing to follow the normal 4-year cycles. And this is why I always say, guys, the best thing that we're going to be able to do going into this next cycle, if you don't have a ton of, technical experience inside of the markets, if you don't have a lot of trading behind you, the best thing we can do, and I really think that most people should just follow the 4-year cycles, because I do think that there will be a day where they stop happening. It's not like we can just sit here and always have the exact same thing every single year. If that was the case, life would just be too easy to predict. And so I do believe that things will change long term, but as of right now, nothing has changed. We've seen the exact same setups and the same exact sort of things that have happened in each cycle, have rhymed, although they do have different sort of price action. And right now with what we're seeing for Bitcoin, having already cleared all descending resistance, having stitched in another 4-year cycle low, this puts us into the new bull market. And this is kind of what I wanted to talk about a little bit more for today's video, is helping you guys to be able to visualize what the next bull cycle is going to look like, what the next 4-year cycle is going to look like. Because when we're looking at all of this stuff, so far, we've done every single thing that we needed to see. And as we're getting into this next 4-year cycle, it's important to be able to map out how far we basically need to go. So November 9th of 2022 was our true cycle low. That was where Bitcoin capitulated after the FTX collapse. So when we're looking at this, by default, in a 4-year cycle, when we're analyzing from peak low to peak low, that basically just means that the bull markets are going to be 3 years long. So we're looking at about 1,080 days, somewhere around 1,000 days is 3 years. And so that's going to be putting us at sometime at the end of the year 2025, right? Sometime around November, considering the fact our last cycle top happened November of 2021. This one could go into December, it could go into January, or it could top a little bit shorter. But generally speaking, they're going to last about 3 years inside of the uptrend. So we know that with Bitcoin, we've already just about completed 1 full year inside of this new uptrend. 359 days from the peak low of the cycle to where we're at today. So we're almost exactly at 1 year up. So by default, we're looking at already 1 year of our new uptrend being completed. So I'm going to draw our line just right over here a little bit. Now when we're looking at this, 1 year is already gone. So inside of prior cycles, the first year has always been the beginning of the uptrend, followed by a little period of correction. And if we're looking at some of our older cycles, they had the same corrections and consolidations, but they were a lot more consistent on the same sort of uptrend, right? All of this was just basically uptrending, making higher highs, higher lows, grinding on this uptrend. And the same thing could be said even inside of our first bear market and beginning to that new uptrend, where it's kind of just consolidating on a new trend. So when we're looking at this current cycle, we're already doing things a little bit different, but not super different for the most part. When we're looking at this, in my opinion, we're all just maintaining the same sort of similar uptrend. People just don't know how to draw it. So when we're looking at this thing has maintained a steady uptrend the entire time. We can look at it being from the peak low of the bear market to where we corrected, maintaining this first higher high to begin the cycle. And then even though this one didn't come all the way down to retest it, that's still, the same sort of level. We got to look at things as not one specific line in the sand, but, specific zones would be more of an accurate way of putting it, where you can kind of draw a couple different ways in here. But either way, these lines hold up, and we're looking at the price either consolidating above or inside of that same sort of uptrend. And so when we're looking at this, we've had multiple different reactions upon this as support, even taking place over in here throughout our most recent consolidation before we ended up breaking out of this $31,000 and $32,000 high. So as we're at this point, this gives us our first year of the uptrend, and when we're looking at all of our prior cycles, really the first year from the peak low of the bear market, this gives us Bitcoin's first higher high in here. This is when we very first consolidated on the main trend, and then we ended up getting the COVID black swan that ended up breaking it for a short period of time. But when we're looking at this stuff, what I find interesting is the first year is where Bitcoin's filling out the next main level of the uptrend. And if we look here, where we bottomed here and where we instantly came back to after the COVID capitulation, and then where we maintained that same sort of consolidation above, was always that main trend line. The only difference was we had the COVID black swan that had this mass capitulation that took place. Otherwise, I don't think it would have happened to the same sort of degree. It doesn't really matter, because as we can see inside of this, the most respected area of demand inside of this chart was always this main trend line. We had a reaction here, 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 here. All of these reactions to begin the first, breakout into that new cycle. And then as we broke out and flipped that level, we had all these reactions going through in here, even though it started to kind of distance itself away from that trend. And that was really the first year, was where we kind of came back down and felt our way out for that sort of first higher high. And then the next year built the next foundation before we went into new all-time highs. Because at the end of 365, that was literally where we were flipping all-time highs. So when we're looking at all of these, all of them are going to be a little bit similar. All of them are going to vary to some sort of extent. Depending on where the bear market was is also going to be a big, sort of factoring in point when we're looking at how much time we still have. Because when we're comparing it to what we saw in 2015, the first year was really where we got the very beginning of the uptrend, and nothing really happened inside of that first cycle, where we spent the majority of time going sideways here, broke out, and then just barely started that new uptrend. It took a whole nother year and some change before we actually flipped the all-time highs. That was where we made that run to the all-time highs. So from peak bear market bottom, you're generally looking at about 2 years inside of each and every cycle before you're flipping the new all-time highs again. So where we're at, we have just completed, or we're at least close to, finishing that very first year of the new uptrend. In the same way all of these sort of did it, we're just in that early stage. We haven't gone super high yet, but guys, if we're going to be breaking out, going up to 50K, like I've been talking about, don't be surprised if we end up seeing a big correction all the way back down to this same trend line. And from there, it's going to be interesting to see if we maintain it with the same level of respect as all of these other prior cycles have. Because all of the other cycles have built some sort of main trend line. The only one to have ever broken it was the one in COVID, the capitulation that happened there when Bitcoin dropped to about $3,800. But we had sort of a negative, black swan event that was happening inside of the market, inside of the world. So if we don't have one of those, are we going to end up just behaving more similarly to prior cycles, where we end up holding on that main uptrend? Because we still recognize, I hope at least you guys recognize, that we have a whole nother year left. If we just barely hit the threshold for our first year of the uptrend, 365 days from that point is going to be giving us, at the end of the year 2024, as the point of us most likely making that next run up to flip the prior all-time highs. So we might see this thing consolidate here, make the next sort of higher highs as we're going, and get that run up into that part of the all-time highs, the resistance there, maybe even making that all-time high breakout right around end of the year 2024. So I think we have in store for us through the rest of this year is really, the next major topping point for this beginning of this cycle. I think the Bitcoin will top sometime at the end of the year. Mainly what I'm looking for isn't so much the time, but the lower high at 48,500. Once we get up to that resistance, I think that sets in about a 30 to a 50% correction. Anywhere in that range, high 30s to the high 40s is a more consistent number that I would be looking at. And so when we're looking at that happening, I find it interesting that for us to come all the way back down from the top of this lower high to back to the trend line is going to give us about a 38% correction. If we end up coming a little bit lower, it's fine. As long as we end up holding that, I think that that's what we're going to end up seeing long term. Us to come back down, retest that trend line, truly set in the first higher high. And then, you know, as we wrap up the end of the next year, that's where we're going to probably be making the run up to those all-time highs. At least that's how prior cycles have worked. Up to this point, all of our cycles have actually lined up very similarly. If we make a run up to the all-time highs, it'll be kind of like 2019. It was also the same in 2017. That first run up to the all-time highs happened right after year 2 of the bottom. And the only one to really differ would have been this one, just because it had a little bit of a shorter cycle, but it didn't really differ that much. When we're looking in terms of the bear market bottom, 365 days was pretty much the entire length of this consolidation before going into new all-time highs. So when we're looking at things that are happening inside of our prior cycles that are more consistent with the time frames that we're seeing today, this is the way that I end up seeing it lining up the most. So next I wanted to jump into the altcoin total market cap so that you guys can actually visualize what is happening here. Does it follow 4-year cycles? Are the altcoins syncing up in any sort of similar way to prior cycles? I wanted to help you guys be able to visualize the same sort of thing, because in my opinion, this is one of the best setups that we can be looking at as well. Now, one of the things I find really interesting about each one of these cycles is the length of time that it's taken the bottom to actually finish. This one took a little over 500 days to actually finish before we started that bull cycle in 2017. Now when we're coming over here and looking at the bottom of 2018, all the way over from where we started to bottom after the COVID lows, we're looking at a little over 500 days. And we're looking probably closer to 600 days before we actually ended up flipping that as new support. So pretty similar sort of time frames, really looking at about 500 and even closer to 600 days in this cycle. Now when we're looking at this most recent one, most of the altcoins like Ethereum, some of the other different high cap cryptos, they always maintained a higher high above their June lows. And so some of them made a lower low. It was just a toss-up which ones ended up making a lower low and which ones held support. But it doesn't really change anything considering the fact this low after was about the same and many altcoins ended up holding the June support. So this entire sort of thing is one big consolidation. And as it stands right now, we're currently looking at a little over 500 days that we've spent total inside of this bottom. Now I find it really interesting that we're seeing almost the exact same setup in every sort of way. If we're looking and following the same time frames of our first cycle low and bear market bottom, this is already at the same sort of time. This entire consolidation is already at that same sort of time. When we're looking at the last cycle bear market, it needs a little bit more time. We'd still be looking at a few months before we were at the same sort of time frames, but a few months isn't that much time to go. We've already been seeing the entirety of this bottom playing out, and what I think is going to end up continuing to play out is for us to see a breakout outside of this descending resistance, because every single one of these cycles, depending on where you're looking at it, I guess it would be closer related to right here, but once we break out of that descending resistance, that's what sets us into that new sort of cycle. This is when we did it in the last cycle, and I bet we're really close to, we're actually doing that right now. That's interesting. As it stands, we're breaking out of all-time log descending resistance for our entire downtrend in this last cycle. We've been consolidating below it for the last couple months, but we just barely got the breakout outside of it. So when we're looking in terms of what we need to see long term, I don't think anything really more needs to happen. We've already cleared descending resistance. We've seen the same length of time inside of this entire cycle low as versus what we've seen in the cycle lows of all of the other cycles. And we've already seen the 4-year cycle low as well. If we're drawing a line there to this one, to depending on which one you draw it with this, because there's the low in June and then there's the low that happened in November. You can draw it either of two ways and you'll get a different answer. But when we're looking at this one to this one is 1,582 days. So a little over 4 years from this bottom to this bottom, but you know, a 4-year cycle nonetheless. When we're looking at this one to June, we're looking at 1,288 days. Almost 4 years, but not quite true 4 years. It's about 3.5 years, a little bit closer to that. But if we ended up drawing this flow all the way over to the FTX collapse and where we saw that, we would actually be looking at exactly 4 years, almost exactly. 1,450 days is 4 years. So 1,477 days, we're pretty much still following the same time frames. It doesn't really change anything, whether you draw the bottom there, whether you draw the bottom there. All of these are the same sort of consolidation, and what we're looking at on a big picture is everything sort of playing out in a similar way. Bitcoin, all of these cycles are very similar. Bitcoin's consolidation, comparing it to other cycles, we're making the same sort of beginning uptrend to begin the new cycle. Generally, what we've seen is it takes 2 years from the bear market low to the point of us breaking out and making a new all-time high, and we just finished the first year. So when it comes time for talking altcoins, now that they're finally breaking out of their all-time descending resistance over here of this last cycle, I think that that is the confirmation that we needed before these things are going to start going up a lot higher and make the next leg up in the cycle. So anyways, guys, if you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these videos. If you guys want to join the Discord server and see how I'm investing into the markets, what I'm buying, what I'm selling, where I'm actually going to be trading and investing the majority of my portfolio going into this next bull run, links are in the description. Go ahead and sign up on my website, lifetime membership. You guys are always going to be able to see whatever I'm investing in inside of the market, whether it's stocks, commodities, or Bitcoin and crypto. All of it's going to be provided in there. So thank you guys so much for the support. And with that being said, I will catch you in the next one. As always, peace out.